Welcome to the Silent Trading channel on Monday the 13th of April. Today we'll be going through the gold chart to see whether right now is it on the bearish side or the bullish side. But before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Okay, so we'll be starting on the 4 hours time frame first, or the 4 hours chart first, to see that the 4 hours has opened the first candle by today, right? By today, the first 4 hour candle was open with a gap below, right? With a gap below around here. Then after opening with a gap, pushing up a little bit and then pushing down to form a bottom wick before pulling back up, and then start pushing up to close as a bullish candle. And after closing a bullish candle, the next candle went into a sideways. The next candle also went into a sideways. And now this current candle is currently in a sideways because why? Because it has formed both a top wick and a bottom wick, but wasn't able to break above or break below yet. So which means right now the chart is going to a sideways. And the problem is we are not going to be entering a position right now at a sideways unless the chart has shown or revealed a bullish or a bearish price action. So right now, to enter a buy side position, you need to wait for this candle to push up and break this resistance over here, right? And the next candle retracement is where we're gonna buy. Or we can wait for this candle to push down and close as a red candle before the next candle retracement, which is where we're gonna sell. Okay, so right now we're not gonna be buying and selling because it is going in a sideways direction, pushing up, pushing down, right? Pushing up without triggering any limits. But what if this push up over here has already triggered something? Okay, this push up over here, this top wick over here has already triggered sell limit at this resistance, right? And then pulling back. If this resistance has been used to accumulate sell side volume once already, the next time it push up to attack this resistance, it is the time to start breaking above. It is the time to start expanding. Because why? Sometimes the chart don't just break out at the first resistance or support triggered, right? So sometimes the first time the market attacks resistance, attacks support, doesn't mean it has to break out at that instant. Sometimes it is just testing the water, right? Pushing up, attacking resistance, and seeing reaction from retail traders and both smart money traders, right? And after seeing reaction, it will either start pulling back and then go on a sideways up, slowly climbing back up. And after climbing back up, and then went to attack the resistance the next time, right? Attack the same resistance the next time. It will only then start breaking up, which means it will only then start expanding, right? So when we need to trade based on what the chart is telling us. If it is telling us that it is accumulating sell side volume, we are never ever going to sell, because accumulating sell side volume, it is accumulating to take out sell side holders, right? Sell volume holders, right? So if once more this candle or the next candle push up to attack this resistance, it is telling us that it is continuously accumulating sell side volume, because it has once attacked this resistance already, which means the next time this resistance is touched and attacked, more sell side volume is going to be accumulated. Because why? Because the market has tricked sellers into believing that attacking this resistance is going to hold, which means the next time the candle attack this resistance, sellers are going to believe that this resistance is going to hold on and then start selling. Because the first time it attacked this resistance, it managed to pull back, it managed to drop in price, which means the next time it touches this resistance, it will then trick sellers into believing that this resistance is going to hold, and sellers will start selling continuously. And after sellers start selling continuously, the chart is then going to expand above, right? So based on all of this reasoning, we can conclude that the market always goes against retail traders, but the real reasoning is the market isn't going against the retail traders, but it's going against the majority of the trade, the majority of the volume in the market, right? So if the majority of the traders are going to a sell side position, if the majority of traders are going to a short position, the market is going to keep expanding above, correct? But if the market start pushing down to accumulate buy side volume, start attacking support, accumulating buy side volume, and then continuously accumulating buy side volume, it can be seen that after accumulating enough buy side volume, the chart is going to dump, right? It is going to expand below, correct? This is because most of the time traders think alike, right? Traders think alike because they believe that attacking support, and if that support is able to hold, they're going to buy at that support, they're going to sell at the resistance, because support and resistance should be able to hold. So when the price attacks support, they're buying. The price attacks resistance, they're also selling. And this is how the chart, the market, the big money is trading and tricking you guys into opening a position at the worst specific spot, right? And when you enter a position at the worst specific spot, you're going to be tricked into opening a position continuously, and not just opening a position continuously, but holding on to that position hopelessly. Not hopelessly, hopefully, right? Because hopelessly is you knowing that position is not a good one, but you're still holding on. But you trick yourself into believing that position is a good one and you're holding it on. This is what I call a holding into position hopefully, but it is actually the market tricking you into holding on to that position, right? And then dragging you down into drawdown, right? Causing you to go into drawdown, and a heavy drawdown at that, correct? So if the market has already accumulated sell side volume, we are not going to be entering any sell side position or any short position until that specific sell side volume at that specific resistance has been taken out, correct? So right now position is not going to be entered until sell side position has been taken out. If you're gonna buy, you're gonna wait for at least this resistance to be broken before you wait for the next retracement. It's then where you start buying, right? It doesn't mean that the market is accumulating sell side volume and you can just start buying at anywhere on the price. You can just start buying anywhere on the chart. Nope, right? Because price action must be confirmed before you start buying. Price action must be confirmed before you start selling. If price action isn't confirmed yet and you start buying and selling, this is what I call gambling, okay? So right now, what do we wait for? We wait for the price to be able to close above, and then buy at this retracement and wait for the price to attack the next resistance, correct? Or if you're looking to sell, we wait for the price to drop down, close as a red candle. The next candle retracement is where we're gonna sell, right? Or at least wait for the chart to break this support first, right? Break this support, and then the next candle retracement is where we're gonna sell, correct? So at every specific spot that we're buying and selling, we need to wait for the appropriate price action. Not just any price action that you conclude yourself that it is gonna hold, right? Not just any kind of price action, any kind of buy action that the chart is moving for you to see, and you conclude that buy side volume is accumulated, sell side volume is accumulated. Don't conclude by yourself that volumes are being accumulated if you do not understand the chart, right? Because volumes are being accumulated at every single point in the chart, right? I confirm you that the volume are being accumulated at every single point in the chart. Because why? The market is able to move because of volume. The market is able to move because of trading volume, which means if there isn't any volume in the market isn't moving, right? But the problem is we need volume at a few specific spot, right? Which is key level support, key level resistance. Because those key level support and resistance is the special spot that most of the people are entering a trade, right? At the spot where there are multiples of minor volume, right? Minor volume accumulating. We are not going to be entering at the spot because minor volume doesn't mean anything, right? We enter at a spot where there are a heavy accumulation of volume, be it on the buy side or on the sell side. So we need to find that specific key level support, key level resistance. Any key level on the chart is deemed a key support and key resistance, right? So we do not conclude that this is accumulating buy side volume and you're gonna sell. This is accumulating sell side volume and you're gonna buy. No. Every specific spot on the chart, there is volume. There is volume at anywhere on the chart. But the problem is we need volume that are in heavy accumulation, and then we know that this heavy accumulation is going to be taken out, and then we start buying and then we start selling at that specific spot that this heavy accumulation is going to be taken out, right? So don't just conclude that the market is accumulating buy side volume, even though it is just accumulating a few tens worth of traders buy side volume, right? A few traders buy side volume doesn't mean shit, right? We are looking at the spot where there are few 10,000 traders entering at a specific spot, and they are entering a buy side position, and then we know that the market is going to dump, and then we start selling at the next retracement, or we buy, right? If we know that the market is accumulating 10,000 people worth of a sell side volume, short position, and they are waiting to taking out all of that sell side position, that is where we're gonna buy, right? So if we conclude that every spot is accumulating buy side volume and sell side volume, we are not going to be able to trade. We will trade only at a few specific spot, which is a key level support, key level resistance only. Okay, so for today, we wait for this bullish price action to be formed and complete before we start buying at the next retracement, or we wait for bearish price action to form over here. If the chart start pulling back and then start dropping down and closing as a red candle, as a bearish candle, the next candle retracement we're going to sell. Or it can close as a green candle over here, creating a support. And by creating a support, if the next candle manage to push down, attacking this support, and also closing below this support, the next candle retracement is where we're gonna sell, right? So we wait for price action. We wait for support to be broken. We wait for resistance to be broken before we buy, before we sell at the next retracement. That is the best spot to be entering a trade, because a price action is formed for you to see, and a retracement is formed for you to see. Okay, so for today, that is all I'm going to be here for you guys today, and I look forward to seeing you guys tomorrow. So for today, I'll see ya.